Hey guys, Green Guy with Green Guy Finance is my handle goes on Twitter. One of my alter egos. The other one is Kids Trust Trader, and that one I use Kids Trust Trader on Twitter to basically put my entries and exits down so you guys can follow a little bit. And I use Green Guy Finance as more of my commentary. I'm going to go through my Friday trades. I had one person asked how it went, and I thought maybe you guys could benefit from this video. And I go through two different strategies. One was a scalp, and I carved the heck out of Twitter, as you guys will see. And then I have the oils, which were basic by the dip. In this first video, I'm going to have two. I'm going to do EOG and COP, the oil shale plays. And then in the second video, we're going to do Twitter. And we're going to split them up like that. So if you like this first video, which I'm going to dedicate to the oils, and you want to see the other one, go for it. But it is what it is. So I think the first question an intelligent person should be asking themselves is, why in the heck on Friday were you not in a position from the open? Because it was so mindless. And God, yes, you're right. I was so bummed about that. I had some software glitches. I didn't have my morning entries on. I posted it on Twitter, as some of you guys saw, but basically had a computer update on me just spontaneously, even though it's set not to do that. So I was still confused as to why it did, and then it blocked a lot of my software because I have extreme security settings. So I had a very frustrating morning. But when you have lemons, you make lemonade, right? So that's what this is, scalping and buying the dip. As you'll see, my first entries on Friday weren't until a little bit later, until I got my feet under me. But, you know, I do options. And if you do options, you got to have your head on straight. It's better to just walk away sometimes. But anyways, made a lot of money on Friday, just not the way most people did. So anyway, hope you learned something. Shale plays. Buying the dip. Let's go through the strategy here real quick. Buying the dip. Buying the dip here, let's first say off. You should start off with your charting software. Put everything on the 10 exponential, 20 exponential, and 50 exponential moving average. Then do the 20, 150, 100, 50, and 25 moving averages, the volume weighted average, and the moving VWAP. I would start off with that. This, what you're looking at right here, is freestockcharts.com. I emphasize the free part. As long as you're doing liquid stocks that aren't, over the counter and etc., you're not going to have any issues with the volume or anything like that. And it does all my needs, and you can actually do some really interesting things. Even this, it has multi-chart view, so if you want to look at a billion charts at once, you can. I have a lot of different charts I have up at the same time. Good software. Highly recommend it. Like the free part. Anyways, after you have those on, you need to look at a couple charts. I would treat each stock individually. This is EOG. Every stock is its own world. This is the long multi-month view going back to June of 2014, when oil first started selling off. And you see this long trend line? See, it sort of hits the top and dips. Keep that in mind when we start discussing this last week, because it's going to get interesting, I think. Now, basically the play, those of you who've been following me, Green Guy, I've been touting EOG this entire week, and beyond that, I was even touting EOG as when it's time to start buying, be looking at this name. EOG Resources. So, 13th, I hadn't drawn a trend line then. I'll tell you when my first trend line went on. Between the 13th and the 16th, a Friday to a Monday, was when I came across an article in Bloomberg. I believe it was Bloomberg. You can follow, just go through my feed if you want to confirm that. But it's rare that you see an extremely flattering cover of an oil play by anybody recently, especially when it's Bloomberg, and especially when they were just glowingly, flatteringly all about the stock. The fundamentals are good. It's an acquisition target, etc. And I thought, just based on the article alone, we'd be able to get some buy action off of this. The USO at the time was oscillating at, let's see, still going downwards. There's the 13th, 16th, but seemed to be oscillating flat when it opened up there on the 13th. But I thought that the article enough was a catalyst to give us some buys. As you'll see, it was. So EOG, boom, was looking at that. So anyways, go into it, and then we had this buy action along this oscillating line. You see this all morning? So somebody was buying in and then defining the top of the channel right there. So anyways, draw a line is the first thing you do. After you draw a top of that channel, draw a parallel line and then see if it sticks. It's pretty much just as easy as it gets. So you can draw a parallel line and see if it sticks. We came into the 17th here, and then I noticed pretty quick, because I was keeping a close eye on this, is that we seem to have the bottom part of the channel defined a day later. So parallel line, brought it over, and it seemed to fit. So now it looks like we might have the beginnings of a strong buy channel. That seemed pretty safe to me. I would say, it's a shale play. It's pretty bottomed. We seem to have a strong buy pattern. So somebody's out there on an institutional buy program. But at the end of the day, 17th, it seemed to break downwards out of the channel. But then you have this nice V-shaped rally. So buying the dip is a definable easy in this name. Went up. You can see it went up close to the channel. And then schwoomph went off. So anyways, that's the history of the channel. When you're looking at the channel, when it broke out, there was some selling to get back into the channel, but that's it. So anyways, it's not defining the total price range, but it is seeming to define the price action. So that's enough that we can trade off of it. Let's see, 19th, you sort of see it oscillated around it. It was also around 100 smooth moving average, so it has a little bit of a sloppy technical pattern, but anyways, we seem to have had enough to trade off of. Come into the Friday that we were looking at. So we have, this is the trend line, and bottom, top. We started off in the bottom. I had a limit order for some of these that got off in time, and I had a small position, but really I didn't post on Twitter until we saw this at, pretty much it was following the 10 exponential moving average up. Seemed a good buy entry. You see the red line is a 20 exponential moving up. Aggressive buying has that pattern. It follows the 10 and the 20 exponential moving average, one of the two. See, this is Twitter from Friday. 10 exponential moving average is the white line. Here's EOG, same sort of deal. So anyways, buy, and then when you see resistance, sell. Pretty much just that mindless. Half an hour in on the price action here, and seeing some little resistance, trim. Pretty mindless. If you are doing a scalp play and you have profits, then trim. Basically, what I was doing was selling off my entire cost basis and letting the profits ride. It's a great way to get a free position. Basically, if you make 10%, you sell off 90, and then you have 10% of a position totally free, and you're only playing with profits. So if you lose it, you're not going to cry. Now, this being what I was saying, a bottom shale, I'm thinking it might still have some upwards potential. But discussion of that, if you want to play this next week, I would say look at this white line. What is that white line? That white line is this line. So you got to be a little careful. Again, that's been a little broken trend line, not exactly holding exactly, but it seems to have bounced intraday directly off of it. So it's something to keep your eye on here looking forward. We ended in the bottom of the channel here. If it breaks downwards on Monday, it might be a buy the dip type play, but this is a white line of fear. Keep that in mind. You can draw it on your own charts at home. White line of fear. If we go up and touch it, I would be selling quite a bit and only holding profits. I wouldn't be risking the boat in this name, just purely based on it might be an acquisition target, because if we tend to do more of those crazy dips again, you see this, it tends to have this downward action that plays out from time to time. You got to be careful of that. So could we go back to the 85s? Maybe, but this has been definitely a hot stock, at least this week. So anyways, last thing I'm going to mention about this stock is its cousin that I have been loving to follow with it next to it. So you got, that's ConocoPhillips. This is EOG. It's ConocoPhillips. See the prices? Look at the trends. Pick a top and pick a bottom. Corresponding. They've been easily corresponding this week. One has been leading and the other has been following. Here, I'll show you the weekly. EOG, ConocoPhillips. See that? When one leads, the other follows, and vice versa. So you have a correlate, and then a strong trend, and then a declining trend to play off of. So anyways, that's going to have something lined up for Monday. I might have some of that. If those of you follow, now you have some perspective at least at what I'm looking at on these charts. That's pretty much it for my shale play. Pretty simple, buy the dip. But, that's it. So anyways, if you guys have any comments or questions, just shoot them my way. And that's about all I have to say about that right now. All right. Next video is going to be Twitter. If you want to do that, just follow my feed and then find that Twitter video post that I put up later also. All right. Thanks, guys. Bye.